All right, so apologies for the abrupt end to part one. Screencastify decided that it was time for that video to end, and I didn't really have a choice. But anyway, to pick up where we left off, we had summed up all the adjustments to net income, and we came to a number of 36,000. And what we have to do now is add that 36,000 because it's a positive number to the 93,000 and come up with what is called the net cash provided by, and it's provided by because it's positive operating activities. So we will say 93 plus 36. And we don't really need these dollar signs, but Excel's just carrying them on. So I'll leave them there. But for your purposes, you really only need a dollar sign at the beginning of a column of numbers. That's why we have it over here and we have it over there. All right. So moving along swiftly, the next item that we need to deal with, or the next activities that we deal with, are the cash flows from investing activities. So this relates to anything like plant, equipment, and other things, land, and so on, that we've bought or sold. It could also be stocks that we invest in. So we're buying the stocks of other companies, bonds of other companies that we invest in, anything that's got to do with putting our money into something or getting our money out of some type of investment. So when we consider these investing activities, we have to go back to our balance sheet and see what has changed in our assets for the year. So remember, we only have land and equipment in this example. So land went down by 25,000 and equipment went up by 70,000. So when we read over here, we can see that no equipment was sold. We know that from before, but land was sold at cost. We do know that equipment was purchased, though, because the number went from 200,000 to 270,000. So that means that equipment of 70,000 was purchased. We also know that land of 25,000 was sold. Remember, we are concerned with the cash that flowed, the cash that came in, the cash that went out. So let's talk about the sale of land first. So if you had to think about this in terms of a journal entry, you would be saying debit cash for the 25,000 and you would be saying credit land. So the debit to cash means that that is a positive, right? It's a positive 25,000. Cash is coming in. And then when you think about the purchase of equipment, right, it's going to be the other way around because you're saying debit equipment and you're saying credit cash, which means that the purchase of equipment for the 70,000 is going to be a cash outflow. And so that's what seems, I guess, to some extent a little bit weird on the statement of cash flows is, when you're buying something, it's money going out. Although you might feel like, hey, but I have more equipment. That's not the point. The point is cash, right? What actually happened to cash? When you buy stuff, your cash goes down. So now you end up seeing that you have net cash not provided by, but net cash used by your investing activities comes out to negative, right? Minus 45,000. And again, over here, you're thinking about used by because this number is negative. So some of your money was used up by your investing activities. The next section, which is also the final type of activities, is cash flows from financing activities. So with these activities, you are looking at predominantly things related to chapter 13 and 14 and 15 that we were working with before. So you're thinking about issuing stock, you're thinking about paying dividends, you're thinking about borrowing, so bonds payable and redeeming those bonds, all those types of activities. 'Cause when you think about financing a company, you can either finance it through equity or you can finance it through debt. The equity is the stocks that are being issued, and the debt is the bonds that are being issued or redeemed, depending on what the transactions are for the company. So in exercise 17-8, you've got bonds payable that went down by 50,000. So when you look at the additional information, it says that they were redeemed for cash, which means there was actually cash paid. So think again about how that impacts the cash flow, think about the journal entry, right? So we're going to say redemption of bonds payable, right? So if we had to think about a journal entry for this, you would be debiting bonds payable and you would be crediting cash. So that means that cash went out. So it's going to be a minus 50,000. Okay, so the next item is going to be common stock. You can see that there was a change in common stock. They tell you over here that it was 42,000. It was issued for cash. There seems to be no paid in capital or any other numbers. So it's just going to be this 42,000 that we're working with. So when you go to the statement of cash flows, let's just move it up here a little bit. You're going to say issuance of common stock, and it's going to be, well, let's think, right? So to issue stock, you're going to say debit cash, and you're going to say credit common stock. So it's going to be a 42,000 cash inflow from the issuance of common stock. Now let's see if there's anything else. Remember we said that dividends also come up as part of this. So indeed we see that there were cash dividends of 35,000 that were declared and paid. So the fact that they were paid means that cash actually flowed out. If they had only been declared, it would have still been dividends payable. So you wouldn't have a cash outflow unless there was dividends payable from a previous year that were paid in the current year. So maybe that's overly complicated. The point is that these dividends were paid, so we can certainly subtract them in the financing activities. So let's go here and say payment of dividends, and let's just think about what that journal entry would be. You would debit dividends payable and you would credit cash. So that means that it should be a minus 35,000, right, on your cash. And so you can go back and just check, retained earnings. What do you think? Should we be doing anything for retained earnings in the financing activities? Well, retained earnings is not a type of financing. It's not a dividend either. So you're not going to be taking the change in retained earnings. In fact, if you think about what we learned in the previous chapters, you'll remember that retained earnings includes all the net income or net loss from previous years. You deduct any stock dividends, any cash dividends, and you make any adjustments for errors that may have occurred. So there's no real cash movements that are going to be impacting retained earnings other than the cash movements we've already taken into account. So what's the rule? You never include the change in retained earnings in the statement of cash flows. The only time you really think about retained earnings is maybe if you weren't given a cash dividends number, and you may have to try and use the change in retained earnings to try and figure out what the cash dividends number is. So at this point, we can actually just add up everything that exists over here for our financing activities. And so when we look at it, we'll see, and again, I'm not going to take my chances. For some reason, my formula sum is not working that well. We can see that it's a negative 43,000. So you can say net cash used by financing activities. So those are your three results. Now the question is, where do we go from here? Well, these three items, and when I say three, I'm talking about these three, right? Those three items, and we can even highlight them so it becomes really obvious, are going to result in either a net increase or decrease in cash for the year. So I'm going to type here net increase because I can already see that the 129 is bigger than the sum of the other two negative numbers. And remember, I know that the change in cash is what I'm trying to explain. And since there's been an increase in cash, there's an expectation that this number should be an increase, right? So the net increase in cash. So we're going to take the 129, we're taking the 45, we're taking the 43, and that comes out to 41,000. That should sound familiar because remember, we said that the change was 41,000 for the year. And so now we say cash at the beginning of the year. And for that, you have to go back to your question, and you see that it's 22,000. So we're going to say 22,000 over there. And then it tells us cash at the end of the year. And this is really the aim, to get to that cash at the end of the year, because this is how you can check your work to say, hey, does my cash at the end of the year agree to what I have on the balance sheet? So you can easily check the number. The 63,000 over here, right? The 63,000 is going to be the same 63,000 that we have on our question. So that's how the cash flow statement shakes out for this homework. Again, there were certain things that we didn't have in this question. We didn't have gains and losses. We didn't have I would say probably gains and losses is like the biggest thing that we didn't have. But I think that some of the hints that you can take away here is that it does help to do some journal entries either in your head or on a paper to try and see what the impact is on cash, that you should have your three types of activities adding up to the increase or decrease in cash, and that you should be ending your cash flow on the same number as cash at the end of the year in your balance sheet. I hope that this video helps somewhat in illuminating some of the ways in which you can solve a cash flow. And I wish you the best of luck in your work.